Hey, Tim Sykes here. Happy Memorial Day. The stock market is closed today on May 25th. Just wanted to make a video talking about what's been going on in the market, where I see the best opportunities. First of all, I do have to wish a happy Memorial Day to everybody, and not just in terms of celebrating a day off or a holiday, but really understanding that we owe so much to our troops and veterans. They make so many sacrifices. This is a picture of me in South Africa with a veteran from the charity VetPaw, which we support with my own charity. I've donated $250,000 to them. They are former veterans who now protect wildlife, but I've heard a lot of crazy stories from them. And it's just incredible the sacrifices they make. So really want to wish a heartfelt Memorial Day to all the troops, veterans, and their families too. So if you do know anybody who has served, just reach out. I think that's a good thing to do on this day. But getting to the stock market, Barron's just did an article actually saying day trading has replaced sports betting as America's pastime. And if you look at all the data, literally surging stock prices in speculative names are at all-time highs. Not just that the stocks are, at all-time highs. I mean, the stock market hasn't been doing well. It's the volatility that's at all-time highs. And this is fantastic for traders. This is fantastic if you're prepared. But never forget 90% of traders lose. So it doesn't mean that, hey, everyone's making money. Usually they're doing pretty bad, actually. And there's been a few articles where they're like, day trading is for suckers. You can't compete with the algos. And I'm like, I mean, there's no real algos. There's no real competition in penny stocks. So everyone's focused in the media on trading Amazon. You can't make money guessing where Boeing is going. And I agree. That stuff is tough. So for me, I focus on, the niche that pretty much the whole world hates, penny stocks, and the press ignores. And, my top students and I are really just laughing our way to the bank right now. Mark Crook, I got to give him props. I mean, there's so many students. I'm sorry I can't name everybody. Otherwise, this would be a 20-hour video. But I'll just name a few students who are doing really exceptionally well. Mark Crook has made $300,000 already this year. He's closing in on $2 million. Also, Jack Guru in the challenge chat. He just actually passed a nice little milestone here, over 400,000. And if you dig into his trades, it's actually interesting. Out of the 400,000 he's made 240,000 in 2020 already. So it takes time. It adds up. But it's worth it. And, he studied his butt off. I think he's in year 3 with me now as a student. And again, people say even if you're not at 240,000 in the year, even if you're at 24,000, it's understanding that there's a mania right now and you're taking advantage of it, long or short, or long and short. Also, my newest 6-figure student, Jackie, 1993, challenge student for a year and a half. And he's made over 100,000. He's based in Hong Kong, which is a tough place right now. So I hope he's staying safe. But 6 figures helps. And I'm also going to I'll link this Barron's article below this video so that you understand, the mania that's going on with day trading. And I'll also link this article that I link often, but too many people haven't read it. The weed stocks from a few years ago. It is a very, very similar mania where the weed stocks just got crazy. I took on a whole bunch of, weed stock promoters and suckers, and the hate was real. If you remember following me in Twitter, what was this, 2014? And they all crashed 90, 95, 100%. And anybody who believed in the hype and the mania got destroyed. So very similar right now. And I say this not to rip on any promoters, not to rip on any, suckers who believe the promoters, just to help you understand that these patterns repeat, okay? These manias repeat. Right now, day trading might be, crazy, but that's because everyone's home. A lot of people are quarantined. A lot of people are out of jobs. So they're looking for new ways to make money. So we have a scary world that has created this, crazy volatility for trading. And I don't know how long the coronavirus is going to last. We'll probably, get the summer off, and then flus and viruses tend to come back in September, October, November. So everyone's kind of prepping for the second wave. If you look at pandemic history, second waves are usually the worst. So I don't know when this is going to end, but I'm just going to, focus on trading. And as I've been telling everybody, even if there was no quarantine, I would be pretty much locked in my house anyways, because I wouldn't be traveling when there's so many opportunities every single day. And I should mention before I get too deep into this video, I have a free webinar next Wednesday evening, and this is we're calling it the 9:30 a.m. Profits Summit. Because there is a pattern that specifically works right now. It's worked well for 20 plus years, but it's really working well with these morning panics. And I get so many questions on morning panics. I think that it's the best pattern for small accounts. So I'm doing a free webinar. I'll post a link to this just below. It's 100% free, no BS, no fluff. I just want you to be better prepared, because when there's a perfect trade, too many people are unprepared. That's what this is all about. So, props to my students like Jackie, who's crossing 100,000, and Jack Kellogg, who's crossing 400,000. I'm already actually closing in on 200,000 in profits this year. This past week was just crazy. I think I made, I don't even know, like 30, 35,000. The week before was like 28,000. The week before that was like 23,000. So I'm getting more aggressive as my account grows. Remember, I trade with a small account. As my account grows, I can take bigger positions. So I start the year off very slow, under the PDT. I've broken above the PDT rule by far. I think it's good, to try to break the PDT rule, to try to see what you can do, after you get above it. But you kind of have to earn your way out of prison. And a lot of people say, oh, the PDT rule is un-American. I used to hate it too. But at the same time, now I've been teaching for a dozen years, and I see how useful it is to help newbies control themselves, because they just can't control themselves on their own. They see too many plays, they see too much money, they see too many other people making money, and they don't want to be left out. But you can't have FOMO. You have to learn to do this yourself. The reason why I bring up these students is not just to brag about their trades, but you can see every single one of their trades. And you can see what they do right and what they do wrong. Jackie, even though he's just crossed 100,000, he has a bunch of gains, 10,000, 8,000. He likes shorting. He likes shorting these, runners. But look at his biggest loss. Okay. He got caught in a runner, lost 30 grand on CAPR. But I like his attitude, where he's saying, I have to do better. Lesson from a crowded trade and massive volume. So that's the risk. But there is a lot of upside, I think, especially for those of us who go long. Here's Jack Kellogg. He's been going short a lot too, actually. If you look at his biggest wins, a lot of them are short, but CYDY was long. So let me get into some plays. And by the way, I don't understand why there are these rumors. They're like, oh, you tell everybody to buy, but you're really shorting. You're the new wolf of Wall Street. And I'm like, what are you I don't short. If you look at these are actually all my trades. I'm 95% long. I've done 2 shorts in the past few months. And they were both wins, but I was very scared, very careful shorting MVIS on the crack after it was up just way too much in a few days, and CODX when the new report came out about them being linked to boiler rooms, and I made like 50 cents a share. Then I was just scared, and that turned out to be the best opportunity, because CODX over the next few days and weeks became a giant short squeeze, as those boiler rooms who were mentioned didn't like it, so they started pumping even harder with CODX. So be very careful with, shorts. That's all I have to say. My biggest gains, are almost all going long. TLSS, TGHI, GNUS, AAWC, DECN, TGHI, again, CYDY, GRNQ, WNDW, ZN. All of these stocks are crap, okay? Let me be very clear about that. I think that's kind of the confusion, because I rip on these companies and I say this is junk, but I'm buying it. And people are like, why are you buying junk? And I'm like, I don't care about the fundamentals of the company. I don't believe anything they say, first of all. They can come up with any revenues they want. They can, say they have deals. I know with 99.9% certainty, all of you No, these companies are going to fail. So the sooner you begin to think of it all as junk, you just trade the volatility and you trade the patterns. But I hate that newbies don't realize that this is junk. They believe in the companies. They usually go down with the ship when the stocks start crashing. And they're like, but the stock, the fundamentals are still good. Why is the stock crashing? And they never understood that it had nothing to do with fundamentals at all. If you remember, if you do read this article about the Men's Journal, Buying High, How to Get Rich on Pot Stocks, which I encourage you to do. This is one of the most important articles ever written on penny stocks, where, I wasn't even supposed to be a part of this article, okay? This was the Wolf of Weed Street promoting all these weed companies. And I just didn't like, the BS he was spewing on Twitter. So I started going after the BS and talking about how, all the patterns were pump and dump patterns. And they would all crash. And I got so much hate. Literally, I was getting like death threats. And so I kind of just got into this article because the Wolf of Wheat Street was blowing up on Twitter back then. And I just don't like injustice. I don't like BS. I don't like injustice. I don't like suckers getting confused. Because again, they lose all their money and then they hate penny stocks when in fact they should just hate bad information and miseducation and being misinformed. But they don't even know, right? Because if you think that these companies are going up based on the fundamentals and the fundamentals keep getting better, but then the penny stock drops 99%, you think penny stocks are just evil and unpredictable. But you were looking at the wrong thing, right? Like you're trying to judge something based on the wrong indicators. You're like trying to judge how good a basketball player is by what he scored on his math SATs, which does not matter at all. So you have to know the right indicators. And it blows my mind how many people cannot accept it. But I get it. What I teach is very counterintuitive. To just think the worst of every company and everyone in this niche. It's not easy. People are optimistic. They want to believe in these companies. But you really just have to be cynical. In fact, actually leave a comment underneath this video if you're still watching. Let's see how many people are still watching. Leave a comment saying it's so important to be cynical. It's so important to be cynical. 6 words, okay? If you think the worst of every company, of every single trader, of every single broker in this niche, you will not be disappointed, okay? Picture your most incompetent friend or relative, the dumbest person you know, the person who just lies and steals and cheats. That is pretty much the typical version of people in this niche. And once you accept that, everything falls into place. But it's difficult to accept because you want to believe in humanity, you want to believe in human nature, you want to believe in innovative technologies, but just expect the worst, okay? And I'm not saying 100% of companies will fail. It's more like 99.9 if you look at the stats. And if, I'm not saying 100% of traders are going to fail. It's more like 90%, but like go with the stats, recognize the stats, okay? And that will keep you safe, this kind of counterintuitive thinking. Just like I say, I'm a retired trader, even though somehow this retired trader trades nearly every day, like half a dozen times a day lately. But that mindset allows me to be patient, or at least I try to be patient, versus, okay, which 6 stocks am I going to trade today, right? That's the difference. And if you start thinking counterintuitively, you really do so much better. Like I do not need to trade in a day. Towards the end of last week, I was really getting burnt out. Recognize when you're getting burnt out, recognize when you're over trading. And yet I'm still trading when there are good opportunities. And right now there are a lot of good opportunities. So this is why it's confusing. Like you can't really understand everything I say in one tweet or in one watch list or in one trade alert. You have to learn the process. Why do I think of myself as a retired trader? Why do I expect the worst out of all these companies? Okay. Now let's get to some charts. Again, if you want to ask me, and I'm getting this question a lot, like I'm a newbie, what's the single best pattern? Please tune into this webinar next Wednesday night, or I guess it's 2 nights from now. This is so damn important because this is the best pattern that I know, especially for newbies. This is a chart of TLSS. This is one of the biggest recent runners. If you look at 100 days, it's terrible. But if you look at 50 days, it's still pretty bad. And if you look at 30 days, it's decent. And this is a nice run up, right? Like here, it ran up two green days and then a red day. Here's one green day and a red day. So you don't think much by looking at this, but here's how the market has changed just in the past week. A lot of stocks that have failed back in, April are now becoming multi-day runners. SPOM is a good example, right? The stock was never doing anything. It's terrible. It's a terrible company. And now, like right here, back in February, it spiked for a few days and then crashed and went back down to 6 cents. And now if you look all over Twitter, I mean, there's so many pumpers. It's crazy. Use the Stocks to Trade social media search tool. I'll do a separate video lesson on that this week. There's so much to talk about there. But long story short, like these companies that are pretty much dead, all of a sudden now are just respiking. They're getting promoted. This one is tricky though. It's had not one, but two, but actually three big red days where it drops 50% in a day. And still the promoters are like, but the CEO met with the prime minister. Like, it's just ridiculous stuff. Like, oh, they're about to get this contract. They're about to do these big things. Again, going back to my thinking, expect the worst out of every company. And I've made money on SPOM a few times, and this enrages the promoters even more because I don't short sell. Like, this stock is too low and too scary to short, but I have no problem buying the breakouts like I did. I think I bought this breakout. I think I might have bought this breakout and buying the dips. I bought one of these dips. I think it was this one. After it drops 50% a few times, I'm just done buying dips because I'm just scared. There's even a risk that SPOM will be halted. But the best pattern that I know, TLSS, I mean, it's very choppy. Unfortunately, penny stock charts have like late prints and misprints, so it kind of confuses you with a chart. It never actually got down here this time to 4.6 or 4.6 again. These are just typos. This one, it actually did get down to 0.05. And this was after a run up from the ones to nearly 8, and it came down all in about 10 minutes. And this was such a beautiful morning panic with massive volume. I mean, this is the thing. Like, you want to trade penny stocks that have massive volume. TLSS, I mean, is trading on the day that I traded it. I mean, it traded 90 million shares on the day. So you can get in and out very easily. E-Trade actually kind of screwed me on this one. I tried to buy big on the dip, and I didn't get executed on most of my position. Where was it? Right here. So again, like, you look at this chart and you're like, oh, there's a dip here, there's a dip here, there's a dip here, there's a dip here, there's a dip here. These other four are not dips. These are misprints on the chart. This was a real dip from 8 down to 5. And it was such a beautiful morning panic. I think Jack Kellogg nailed it. I saw several other students nailed it, but a lot of people didn't because they just didn't know to focus on it. So if you want to say, hey, so many stocks, so many different plays, it's confusing, it's frustrating, it's choppy, focus on one pattern, buying panics on stocks that have run for 3, 4, 5, 6 days. Not just buying any panics, because with any panics, you don't know when it's going to end. But on like a multi-day runner like this, people are going to buy this dip. And even though it looks like, okay, it got to 5, it didn't. If you were there real time, the bid was 0.0501. That's right, like 1/100th of a penny. But it never even tested 0.05. And that's important because you have to look at where do you want to buy these dips. You don't just buy randomly. It's very scary to buy a stock that's crashing. But if you buy a stock that holds a key level like this at 0.05, I got in at 0.51 with a position that was just much smaller than I wanted. Or if it had broken 5 and let's say gone down to like 4.9 or 4.8, because you would have a lot of stop losses at 5, and theoretically if they get taken out and it only goes down like another tenth of a penny, that's a good sign because that should be max selling with stop losses getting taken out there. The 0.05 still has yet to get taken out, so I'm waiting on this. It's back to 7, and again, ignore these misprints, late prints, typos, whatever you want to call them, because the next time this crashes, I'll be watching this key level at 0.05 again very closely. I hope that it cracks. For me, I want as much volatility as possible, right? So promoters, pumpers, I love them, right? I want these pumps to go as high as possible, like MARK. Let's talk about that for a second, because MARK, I've been buying this since the 30s because they have like these, thermal cameras that get your temperature, and you can track a lot of people in their temperature. So theoretically, if the nation or the world is reopening, everyone's going to be needing to check their temperature, even though it's debatable because 40 to 50% of people who are getting this virus have no signs or symptoms whatsoever. So it's debatable. But, again, companies just want to put in some measures just to look like they're trying and maybe to satisfy the insurance behind all of this. I don't know how that's going to work. But anyways, they have a product that can be hyped. They've been tweeting like, "Oh, thank you, this place and that place." Like, so it looks like they're doing tests or getting contracts everywhere. But there hasn't been a press release. They're actually reporting earnings on Monday. It should be interesting to see what they say. I want this to go as high as possible, okay? At the same time, I know that there's a 99.9% chance that they're going to screw up and that this stock will be trading for a penny or 2 pennies in the next year, 2 years, 5 years. I don't know how quickly it drops. They have a chance, right? Like if you look at stats, they have like a 0.1% chance of succeeding. Maybe it's 0.2% because they're in the right place at the right time with what's happening in the world. But the odds are against it. And for me, I don't care whether they succeed or not. I mean, one company succeeding is not going to change the odds out of tens of thousands of penny stocks that have failed. But whether they succeed or fail or not, I just want maximum volatility. I was buying it here in the 30s when it was like they had the same product and no one cared about it. But then all these pumpers came on board and the whole mania started. So I love pumpers. I love people hyping this stuff up. I love people getting, more traders involved, like the way that pumpers say. And again, I don't want to expose the pumpers. I don't want them to stop doing it. People ask me like, who are they? Use the Stocks to Trade social media search tool. You will be shocked to see what kind of blatant pumping is going on stocks like this. But I don't want it to stop. But I just laugh when they're like, do not sell Mark. If you sell Mark, you're dead to me. Like they're just trying so hard to get so many buyers and no sellers. And then here I am coming in and saying, oh, these penny stocks are going to fail. It's a pump. And people literally think I'm crazy. They're like, didn't you see this tweet? Didn't you see this? I'm like, I know, I've been buying. So I'm coming in to like spoil the pumping party, but then I also say I'm not shorting and that I'm buying. So people are just confused. So I understand why people think like I would be shorting this, but I'm not. I want this to go as high as possible. It's the same group. They pumped up MVIS saying what was the rumor that Microsoft was going to take it over at $10 a share. And, I was buying this again in the 30-cent area. And I was, trying to buy it here. I think my last trade was at 90. What was it? I bought it on more Microsoft rumors at like 90 cents or 95 cents. And I sold it at 105, but it went to 115. But anyways, this stock was left for dead just a few weeks ago. And now that same group has pumped it up. They also pumped up UAVS, up to 5. And this was one of Tim Grittani's biggest wins. He was shorting it in the 4s and 5s. Jack Carew was shorting it around 4. I think he made like 16 or 17 grand shorting it. That is what I love. Okay. So recognizing that these companies are trash, these stocks are trash, but in this crazy market, they are getting pumped up. And this is why I bring up not just, my favorite pattern, but I bring up this Barron's article so that you understand how many traders there are. I want you to understand that this is not the first time that there's been a mania. But if you watch all my video lessons, you'll see that, I often focus a lot on holiday trading, Christmas time, Thanksgiving, because that's when more people are home and like wannabe traders, just pump up stocks. And that is exactly what's happening right now. It doesn't matter whether it's a weed stock. Some people get confused when I post about this article. They're like, this was a few years ago, and this was the weed sector. I get like these crazy tones, and I'm like, I know. I don't care about the sector. I don't care about your bullshit fundamental, BS pumping. What I care about are patterns. So every day, I'm trying to de-brainwash newbies. I don't want the pumping to stop, so don't, send this to a pumper and be like, Sykes hates you. If you send this to a pumper, say Sykes loves you and Sykes wants your address so he can send you an edible arrangement and thank you for your pumping, whether it's unethical, whether you're going to spend, eternity in hell for lying to so many people. That's fine. They already made their, bed. Now they have to sleep in it. But for me, I'm just kind of like a commentator of what I see happening. And it's always interesting to see all the hate when I come at this from a totally different approach than the BS fundamentals. Because again, the fundamentals are irrelevant. All these companies are going to fail. If you watch Tim Grittani's DVD called Trading Tickers, he specifically talks about, look, like just focus on the tickers. And now he's made over 11 million. Tim Grittani has made over 2 million this year, by the way. I should have highlighted him earlier in the video, but he's just on another level now. What these other students, these upcoming students like Jackaroo, or myself or Jackie or Mark Crook are doing, making 100,000, 200,000, 300,000. I know that sounds like a lot of money, and it is, but it's actually achievable if you focus on patterns, if you focus on trading these volatile stocks, not believing in them. Okay. Whether it's myself going long but not believing, or Jackaroo shorting most of the time, but now going long a little bit, or Jackie, shorting sometimes a little too soon, like on CAPR, but overall still making $100,000. Trading the volatility, this is what you need to do. Okay, so that's why I want to make this video when the market is closed, just because there's a lot to unpack. Rule number one is cut losses quickly, but if I had like a rule number two, it would be like just expect the worst out of every company, everyone, every broker. And then you really won't be disappointed. You'll just be like, oh, I expected this company to fail. Oh, I expected this company to screw up. Oh, I expected this, broker to lie to me. That's really how you have to think. And again, there's so many traders. Let me just link this Barron's article one more time. And again, if you want to read these whole articles, I'm going to link the Barron's article. I'm going to link the Men's Journal article, and I'm going to link my webinar on Wednesday just below. And I encourage you to click all three links and study them and read them. But this Barron's article really, I think, means a lot, because this is happening right now. We might not have a mania a year from now, May 25th, 2021. We might not have a mania 2022. For all I know, we could be in a depression by then if the virus keeps going, or maybe, we find the vaccine and then we're back to all-time highs. But what I want you to understand is that I don't play those guessing games. I don't care what the economy is going to do. I feel for those people who are losing their jobs. I feel for people who, want to make fast money, but the best patterns, the best money, the highest odds trades that you can make is by focusing on patterns that repeat again and again. And I know I always say study hard, no days off, watch my video lessons and DVDs, but I mean it. Okay. You need to learn example after example after example in this game, whether it's, studying all 850 video lessons on my morning panics, or recognizing first green days, or shorting, first red days, or recognizing that first green days, sometimes you don't even hold into the close. I mean, let me give one example, AAWC. I mean, this was a huge runner. I'm still watching it, but it needs to break out. But, the best time to be long was not necessarily to hold it overnight. It actually went down here from 4 down to 2.7 and then back to 4.5. This was actually a good dip buy right at the open here. But the time to buy was the afternoon breakout or into the close, where it closed right near its highs. So first green day, you don't necessarily have to hold overnight anymore. And again, this comes down to, are you understanding why these patterns are working, how they're created, not just memorizing patterns. Like a lot of people just, they're like, yeah, Tim, you talk a lot. I don't want to listen to this all. Let me just buy the first green day OTC. I got it. And they buy it, and then there's a morning panic the next day, and then they're like, Sykes, you suck, or penny stocks suck. And I'm like, you didn't adapt to the variation in the pattern. So that's what this is. It's understanding the just everything that's going on, the combination of indicators that creates this mania, recognizing that most traders are unprepared, recognizing that most newbies are not as cynical as they need to be. That creates opportunities. You focus on volatile stocks and focus on morning panics. Anyways, I got to go work out because I'm getting fat as shit. I'll link this Barron's article down below. I'll link this Men's Journal article down below, and I'll link this webinar that I'm doing, free webinar that I'm doing Wednesday night. I highly encourage you to tune in. And again, stay safe and focus on patterns. Expect the worst out of everybody. Leave a comment underneath saying, what did I say? It's so important to be cynical. That's what it takes in this niche to survive and thrive. Thank you. I'll see you in the chat room tomorrow.